Hey, Dr. Dowling. First of all, thank you for WCI and all your company does for us. I'm a psychiatry resident from Indiana, and I have a question. I spend a lot of time on the internet and I've seen ads for Masterworks, which is a fractional ownership investment platform for what they call quote unquote blue chip art. I wonder how good the investment is if I'm seeing so many ads for it, as that has been, in my past experience, a bad sign. Then again, art is a very difficult sector to diversify into, which might make fractional ownership attractive. What do you think of Masterworks or of art as a diversification strategy in general? Correct me if I'm wrong, but to paraphrase you in the past, you've said that if someone is 95% or 98% invested wisely, that the last 2 to 5% wouldn't make much difference. Would you consider art speculation to be best in that 2 to 5%? And if so, how would you go about it? Thank you.
All right, Justin, good question. Here's the deal. Art is a speculative investment. I don't invest in speculative investments. Okay. I don't invest in Bitcoin. I don't invest in gold. I don't invest in platinum. I don't invest in commodities. I don't invest in empty land. I don't invest in art. I like to see my investments producing something, whether it is earnings, like you'd see with stocks, whether it's interest, like you'd see with bonds, whether it's rents, like you see with income producing real estate. That's what I like to see from my investments. At least some component of it is it producing something rather than all of it just being speculative. Art, of course, is completely speculative. Now, you are right that if you have a play money account, you should limit it to 5% maybe of your portfolio. If you want to put 5% into Bitcoin, or you want to put 5% into art, or you want to put 5% into Mongolian oil futures, knock yourself out, right? Because if your strategy isn't good enough that 95% of what you're expecting out of it isn't going to be more than enough, then you probably have bigger issues with your investing strategy. So if you want to do this, go ahead and do it. I can tell you this. Masterworks applied to advertise at the White Coat Investor. We did not take their money. Okay. We don't have a full-throated endorsement for everybody that's ever advertised at the White Coat Investor, but we do feel some obligation to our listeners to put our money where our mouth is. And so we pass up a lot of advertising dollars from companies that we don't necessarily believe in their mission. And I suppose that applies to Masterworks. I don't know that's necessarily bad what they're doing. Obviously, there's lots of things to invest in. And I don't know that they're any worse than anybody else investing in art. But we just didn't feel like it was a service that we felt comfortable plugging to our listeners. So that's why you're not hearing about it here, because we don't think it's a great idea. But if you want to do it with 5% of your portfolio, knock yourself out. We really don't care. Okay. And it's your money anyway. So you can do whatever you want with it. And you don't need our permission to invest in something. Just because I don't invest in it doesn't mean you can't invest in it, but it does dictate how we advertise. Now, if you wanted to invest in art, and we're talking theoretically here, we're talking hypothetically, how should you do it? Well, my understanding of art is that the high-end pieces have very good returns and the low-end pieces do not have good returns. So if fractionally investing in it allows you to buy more high-end pieces than low-end pieces, maybe that's a good way to do it, assuming you don't have, whatever it is, $200,000 or something to buy a high-end piece. The truth is in investing, you don't have to invest in everything, right? I think you mentioned you were a resident. It's okay to not invest in everything. There are no called strikes in investing. Right? Look at my portfolio. It's pretty boring portfolio. 85% of it is in index funds. It's index funds. That's all I'm investing in, right? Yes, there's 15% in some private real estate, and I've done pretty well in private real estate, both on the debt side and the equity side. But 85% of it is in boring old index funds. I'm not in a bunch of cryptocurrency and art, etc. And where am I sitting in life? Well, I'm in my mid-40s. I'm financially independent. I can do whatever I want with my life. I've won the money game. Okay? You don't have to get into all this minutia in order to be successful as an investor. I mean, you can do it with a very boring portfolio, funded adequately using your high income. And that's the whole point of what we're doing here at the White Coat Investor. We want you to be able to focus your life on your patients, on your family, on your practice, on what matters most to you, and a minimum part of your life on your investments. The goal isn't to just play with your money all day long. The goal is to do something meaningful with your life and have your financial ducks in a row on the side. So I hope that's helpful to you. Let us know how it goes if you do choose to invest, and send us a speak pipe in a year or two and let us know how it's going. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.